This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
A trade war between China and the West over green goods is certainly not the best way to combat climate change. It will lead to inefficient production, wasted money, slower economic growth, and geopolitical tension. As Beijing floods the world with cheap green goods, the rich democracies and some emerging markets will put up trade barriers. That will delay their energy transition as they'll pay more for clean technology than they otherwise would. But the glut of electric vehicles, EVs, solar panels, batteries and the like will speed it up elsewhere. After all, this kit will have to end up somewhere. In theory, there is a much better way to stop the planet frying. The whole world would impose a high price on carbon emissions, incentivizing producers and consumers to shift to green technologies. There would then be no need for expensive and wasteful subsidies to drive the process.
Asia's imports of liquefied natural gas, LNG, rose sharply in March as the top buying region took advantage of lower spot prices to draw cargoes away from Europe. A total of 24.16 million metric tons of the super-chilled fuel landed in Asia in March, up from February's 22.73 million and also up 11.5% from the 21.67 million in March 2023, according to data compiled by commodity analysts Kpler. The strength in imports came as spot prices for LNG for delivery to North Asia remained muted in February and early March, when the bulk of cargoes would have been arranged.
Moving on to the top news in the energy sector.
India's fuel consumption fell 0.6% year-on-year in March, but demand for the 2024 financial year was up about 5%, primarily driven by higher automotive fuel and naphtha sales. Total consumption, a proxy for oil demand, totaled 21.09 million metric tons, 4.99 million barrels per day, in March, down from 21.22 million tons, 5.02 mbpd, last year. Preliminary data from the Petroleum Planning and Analysis Cell of the Oil Ministry showed on Saturday. However, fuel demand for the 2024 financial year, ending in March, hit a record high of 233.276 million tons, 4.67 mbpd, compared to 223.021 million tons, 4.48 mbpd, a year earlier.
Russia's budget deficit for the first 3 months of the year stood at 607 billion rubles, $6.56 billion, or 0.3% of gross domestic product, supported by a strong year-on-year recovery in energy revenues, the finance ministry said on Monday. Oil and gas revenues were 79.1% higher than a year ago. In early 2023, Western sanctions over the conflict in Ukraine that included an oil price cap and oil embargo squeezed Russia's energy revenues. Non-oil and gas revenues increased by 43.2%, the ministry said, boosted by higher-than-planned tax receipts. Next, we have the top news in metal markets. Shanghai copper prices jumped to a record high on Monday as supply cuts and positive demand prospects underpinned the market, while price gains in London were limited by caution over the timing of U.S. interest rate cuts. The most traded May copper contract on the Shanghai Futures Exchange was up 2.6% in the morning session to a record high of 75,510 yuan per ton, catching up to the gains of London prices after a trading holiday break on Thursday and Friday. 3-month copper on the London Metal Exchange gained 0.2% to $9,343.50 per metric ton by 0438 GMT, having gained 5.2% in the previous week.
Gold prices extended their record rally on Monday, steered by speculative buying and persistent tensions in the Middle East, which overshadowed strong U.S. payrolls number last week. Spot gold was up 0.3% at $2,335.73 per ounce, as of 0646 GMT, after hitting a record high of $2,353.79 earlier in the session. U.S. gold futures gained 0.4% to $2,354.50. If you look at futures pricing, We're seeing indications now that there's a bit of momentum chasing in the market. To an extent, we're seeing a little bit of excessive optimism about the outlook for gold at the current level, said Kyle Rodder, a financial market analyst at Capital.com.
We will now look at the top news in the agricultural sector.
Australian farmers are likely to plant more wheat and barley this year, thanks to Chinese demand and wet weather on the country's east coast, while canola sowing should fall amid lower profit margins and dry conditions in the west, analysts said. Australia is the world's second largest wheat exporter and a key supplier of barley and canola, with the size of its harvests impacting global supplies and prices. Wheat and barley production is likely to rise by several million metric tons in the 2024-25 season ending in June next year, while canola output could drop by about 1 million tons, analysts forecast.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.